Good morning. Happy Tuesday. Welcome to today's episode of Morning Wealth. Three things that we can look to here. The impact of no share buybacks this year, US housing data that came out yesterday, and a new 1 trillion plus US stimulus package that is taking shape. US stocks climbed on Monday as investors continue to put faith in signs of a nascent economic recovery, even as coronavirus infection rates rise in some states. All three major indices were finished higher despite a rocky morning session. Microsoft gained about 2.8% to lead the large cap technology stocks higher, though they were also joined by shares of utility companies, retailers and restaurants. The Dow and S&P were up 0.6%. The Nasdaq in the meantime was up 1.1% to come to a record close. The jump marked the index's seventh consecutive day of gains. That's its longest winning streak since December. Treasuries inched lower. The 10-year yields were up by about 2 basis points. Gold climbed, nearing a 7-year high. Oil also rose. Equity futures are pointing higher. Asian equity futures are pointing higher. In Europe, the stock 600 lost about 0.8%. Last week, we saw some strong consumer numbers coming from the retail sales print. Yet the housing data shows that there are still signs that the recovery has a long way to go. On Monday, fresh data showed that sales of previously owned homes dropped by about 9.7% in May from the prior month, as the pandemic prevented shoppers from taking advantage of a typically busy spring home buying season. The expectation was for a decline of about 8.8%. Share buybacks from companies have been a big source of demand for stock market over the last few years. But American companies are retreating from purchasing their own shares as they preserve cash during this pandemic. But small-time traders, day traders, are making up for the difference in terms of demand. Goldman Sachs said that the net corporate demand will plunge by about 80% to 100 billion this year. That's a turnaround from the previous 4 years when companies spent about 2 trillion buying back their stocks, dwarfing every other category of investors. There are only two things that really matter this week: the number of COVID-19 cases and any headlines related to the extension of the US unemployment benefits or more stimulus. The White House said today that the outlines of the new 1 trillion plus US stimulus package is taking shape. There's been a lot of talk around a second stimulus check payment or other coronavirus relief measures. According to the latest announcement, it could include unemployment extension and a return to work incentive. As the July 31st expiration date for the extended unemployment benefits near, this conversation will start gaining more and more momentum. The World Health Organization, in the meantime, say that Sunday was the single biggest increase of COVID-19 cases worldwide. Europe data on the queue today. Europe's economy may have begun recuperating this month, with composite PMI rising to about 43 from a rock bottom of 31.9 in May. Moving on to equities. Apple kicked off its annual development conference. The long-rumored announcement was finally made. Apple plans to sell Mac computers using processors designed in-house, signaling an end to a 15-year alliance with Intel. They also released a new version of the Mac operating system, and which is going to be supported by these new chips, and also highlights were that they're going to make some changes to the iPhone home screen and introduce some widgets. Payments company Wirecard tumbled 44% after the troubled German business said that more than $2 billion missing from its balance sheet probably doesn't exist. Moving on to Forex, the New Zealand dollar and Australian dollars were the biggest beneficiaries of the US dollar weakness. Euro and sterling will be in focus on Tuesday with the PMI numbers, which is scheduled for release. That's your market update. Thanks everyone. Stay safe and healthy.